Hello traders, in today's video we're going to discuss top-down and multi-time frame analysis. So when we are trading, it's very important to have a understanding of where the major levels in the market are. And the reason these levels are important is because these levels can induce buying and selling into the markets. Now you can pair this with other things outside the charts such as macroeconomics, geopolitical factors and things, but we won't go into that in this video. So these levels are very important, and it's very important you understand how to draw them and how to find them. So multi-time frame analysis is essentially using more than one time frame to do your analysis. I think that's quite self-explanatory. Now top-down analysis is using higher time frames than what you would regularly trade on. So in this video, you can see this chart here is the weekly time frame. The chart next to it is the daily. The chart here in the bottom left is the 4 hours, and then the chart down here in the bottom right is the 1 hour. So you can see the time frames gradually get smaller and smaller. And the reason this is because I use the time frames for different things. So essentially, if we go into the weekly time frame here and just look at the market structure, is there anything here that points out to you? Because there is to me straight away. So we can see right here we've got this level of really strong resistance, and bear in mind this is the weekly time frame, so this level is much stronger than if it was on sort of the 15 minutes or the 1 hour. Now a good analogy I heard for this is think about top-down analysis in this way. So rather than drawing your supports and resistances on sort of the 1 hour and the 15 minutes, the smaller time frames, that's essentially like doing a survey. Now, would you rather a survey that contained 100 people, or would you rather a survey that contained 1,000,000 people? And the difference is the time frames. So obviously these wicks and these candles contain much more data than sort of a 15-minute candle or a 1 hour candle. So the higher the time frame, the more major the level is. And that's why it's important to do your top-down analysis and pay attention to these major levels in the markets. Because the higher the time frame, the more major the level. The more major the level, the higher likelihood that we will see some sort of market reaction from. So already we've got this really nice resistance on the weekly time frame on gold. So if we just go down and have a look on the daily and see how the market reacted at this period, we can see here these are huge moves that we've had on this level. So obviously you wouldn't just start shorting this. I'm not saying you should just go and short off resistance and buy off support, but just for example's sake, so I can show you sort of the reason you may want to pay attention to these, is if you, again, this is hypothetically, but if you could time these, you could get some crazy trades. However, it's also not just used for buying and selling from. So what you can do is if you've got a level of support as well, or you've got some reason to buy. So let's say that you are fundamentally bullish on gold, you want to look to buy, but you've got this major level of resistance through here, and you've got this sort of support right here. You can see we've got the sort of wicks here that caused the resistance, then it turned into support. So we can see it's supported through this period. So if you saw that it's been rejected 3 times, so once here, and once here, and you were looking to buy from this level again, you could then look and say, okay, well, there's a wick here. I'm just going to set a pending order with a stop loss below these lows here. Bearing in mind, this is the weekly. So now we go down onto the daily time frame and we can say, okay, I like the look of this trade. The stop loss is a bit tight, so let's just extend that slightly so give price some room. Obviously, you don't want to buy straight off the support because you don't know where the market will actually stop selling and stop buying. So let's just put our entry a little bit higher for a bit more of a realistic trade idea. And then obviously, like I said, we've got this level of resistance on the weekly time frame. So we put our take profit at sort of 50% in this zone. And you can see this would have worked out really well. So essentially that's it. That's the way the process goes, but we can go further. So I assume that obviously you don't want to be sat on a daily time frame, because if we take a look and see how long this trade took to work out, it went from the 10th of August 2021 all the way through to April 2022. So this took just under a year to play out. So obviously we don't want to be sat in a trade for a year, or the general trader, the average trader doesn't want to be sat there for a year. So what you can do instead is go even further. You can go down to the H4 time frame, and we can do the same thing. We can say, okay, we've got major levels of support and resistance on the daily and the weekly. So how could we take this trade on a smaller time frame and still take advantage of this move? Well, we can just zoom in. So we start doing the micro analysis now rather than the macro. So we've seen we've got this low here. So obviously we've formed a low on this weekly level of support, came down and formed another low here. So we've got a double bottom, and this double bottom is on a weekly support. And again, this is assuming that your bias is bullish on gold. We could then look for a buy position. We can have a slightly tighter stop. And we could just target, these highs here. We could go for sort of a 1 to 3. We could extend it, go for a 1 to 6, or even if you really wanted to, you could then again target this level here, and get a crazy trade. This is 1 to 18, so it's not very realistic to try and tell you you can get this trade. But this is a great example of how this sort of stuff works. You don't need anything too crazy, and obviously this is only one example on gold, but this happens all the time. If you just zoom out on timeframes, and this is a big problem that a lot of new traders and a lot of retail traders seem to have, is that they're stuck on like the 1 minute, the 5 minute, the 15-minute timeframes, and they just aren't zooming out. They're not seeing the markets in a big picture and seeing what's actually happening in the markets. So sure, this weekly downtrend is obviously a downtrend, but on the 15 minutes, the hourly, 5 minutes, it might not look like a downtrend. You might see it as bullish and start buying into this overall movement in the market that's actually heading to the downside. And that gives you an automatic disadvantage because you're moving against the overall flow of the market. So once you've done your top-down analysis, we can do some more. Let's go on to a different pair. Let's go into euro dollar, for example. So let's just remove any drawings here. So again, we can see we've got level of support. Now, another little tip for you is the major G10 currencies will appear to have these levels more often. And the reason is, if you actually understand what the G10 currency markets are, which is a lot of corporate buying and selling and hedging, these markets tend to range a lot more compared to something like gold or the indices or even the exotic pairs. So you can see this looks more like a sound wave. And of course, we do get nice trends. However, we do also see a lot more ranging markets here. And obviously, this is the weekly. So ranging markets on the weekly time frame isn't necessarily a bad thing, but it gives us really good levels we can pay attention to. So we've got these levels throughout here on the weekly time frame that we can pay attention to. And we can say, okay, these are potential buying and selling areas. So now we'll go into the 1 hour time frame. So we'll slowly move down to the hourly, and I'll show you a possible approach if you want to sort of day trade from these levels. So we've got our weekly levels. Is there anything on the daily that we need to pay attention to? Let's just take a quick look. Nothing that I can see immediately. So we'll go down onto the 1 hour. So as I said, we've got, let me just hide this indicator actually. I don't think that needs to be on here right now. So there we go. So yeah, we've got this weekly level, this daily level throughout here. So we can see it was already touched. We drew it up here. Personally, I wouldn't trade this from this level because this isn't enough of a resistance. But what we saw is this double top get formed in this area. So right here, we've got this double top. We broke down and we came and we retested here. So this could be a potential short. So we've had a bearish engulfer here. We could put, it depends how aggressive you want to be, but we could put a stop just above this high. Or if you want to be a bit more conservative, we can go above the sort of wicks on the previous high. So we could go about here. But that's personal decision. That's up to you. And then we could have a target down at these previous lows. Or, if you want to be, again, really, if you want to sort of swing trade this, we could go down into the level of support. In this case, I don't think it would have been hit, which it wouldn't. But this is still a very good example on how to use these higher time frame levels. And you can use these for sort of any type of trading. It's just really good to keep in mind. And again, this support is drawn on the weekly time frame right here. So once we see it on the hourly time frame, we see this sort of consolidation, and we see it continuously bouncing and bouncing and bouncing. there's no reason we couldn't enter a trade. So we could enter, for example, let's say we entered on this pullback here. We'd have a stop just below sort of the previous low around here, like this. And then for a target, obviously we need to look back in time. We can go for this previous high up here. And then let's see. So of course we would have seen a little bit of sideways movement, a bit of pullbacks and things. So depending on how patient you are and how strict you are in management, you may have been taken out at break even or closed early. However, the point stands that you've got a nice take profit here from just a weekly support. And again, this isn't taking into account other factors. So your personal strategy, your entry criteria, macroeconomics, geopolitical situations, market sentiment, all that type of thing, news events. So trading is very, very simple. You don't need to overcomplicate it. You could very easily start making some money just by looking at these higher time frame levels. And now, of course, you do need to be quite strict. You need to understand the time differences. So if you were trading on the daily time frame, you could definitely expect to end up holding a trade for 6 months to a year, depending on how large your take profit is. Whereas if you then scale down sort of the hourly time frame, you could be in and out within a day to 3-4 days. So very, very easy stuff. This is sort of the basics of trading 101. However, I hope this gave you some clarity, because I've noticed that, as I said earlier, there's a lot of traders that focus on the small time frames and don't really understand how to structure these daily, weekly levels and then turn them into smaller time frame trade ideas. So that's about it, to be honest, guys. There's nothing here that you need to really pay attention to in terms of like super detailed stuff. Because it is quite literally as simple as drawing these boxes on the higher time frames, going down to a smaller time frame, and then looking for entries. Now, just before you click off the video, I want to preface and I want to just make sure you understand that this isn't a strategy in itself. Buying and selling off support and resistance isn't always the best idea. Now, it can work, of course, and that's what I've done in this video. But of course, this is just using hindsight. So this might not work properly in real markets, live markets. So I would really encourage you to use this concept, use these higher time frame analysis, go and test it on a back testing website, and then mix it with your own entry criteria, your own strategy, and just see if it boosts your win rate a little bit, gives you extra clarity, because I'm sure it will. Because as I said, these weekly levels are very, very strong. But when you're on a smaller time frame, you may not notice that you're buying into a weekly resistance and then you get stopped out and you wonder why. Because small time frame, your analysis looked great, the entry criteria is great. However, there was just a lot of selling coming into the market off this weekly level. But yeah, as I said, that's about it for now. Make sure to like and subscribe. I'm going to try and put out more content like this and try and help you guys break the markets down into more simple things to make it less complex. It doesn't need to be all the crazy 1 minute time frame stuff. So yeah, I'll see you guys soon. Thank you for watching.